G'day, folks. Hope all is well. Adam Renouf and Steve Maynes doing our weekly wrap. G'day, Steve-O.
Yes, Ads, how are we all?
Good, thank you. Now, I've got an interesting one for you today. We were interest rates. Now, part of my business, I don't do mortgages. I refer them out, but is it a core part of your business? So, yeah. Can you give us a bit of a rundown? What's the difference between fixed and variable at the moment?
Well, it's a good question. Look, a lot of clients are asking that question right now. We're seeing interest rates rising. We had 0.5% last month, or this month, I should say. And, the expectation to be another 0.5% in early August and probably 2 or 3 more after that. So, look, they're definitely rising. Yep. And people are, are scared about, with the cost of petrol being over $2.20 a litre and to buy a lettuce is $10. So, the cost of living, it's really hurting people.
Absolutely.
So, look, I get clients who ask me the question, should they fix now? The bottom line is the horse is pretty much bolted. It's too late to do a fixed rate at the moment. You're probably looking around that mid fours, 4.3, 4.4, 4.5%. Yep. Whereas at the moment you can get sort of mid to high twos, for an owner-occupied home loan. Yep. So, you're paying a premium of about almost 2%, 1.8% premium for that benefit of having it fixed for 2 years. And the likelihood that the rates will go up for the next 2 years more than that fixed rate, it's hard to, look, no one has a crystal ball, but it's probably unlikely. Like it's going to go much higher than the fixed rate. You are going to just break even. If you fix now, you won't be breaking even because you're going to be paying 4.4 from day one, whereas right now you'll be paying 2.6. So
absolutely, and that's the thing that people don't think about, is it? It's like you fix now, but you're actually paying that buffer in the meantime, and then you've got to, as it comes off, you're still potentially at that point. Absolutely right.
Look, in my experience, with buying a house and borrowing money, I've never won out of a fixed rate. The banks are the only ones who win. So they're not stupid. They know where rates are going to go pretty much. Yep. And really, by the banks offering 4.4 fixed over the next 2 years, I think that's what it's really telling you. The banks are pretty confident that's kind of where the variable rate will probably sit. Yep. So that's why they do it. Yep. Yeah, absolutely. And so they're, literally laughing all the way to the bank. People want to fix in now.
And there's risk, right? So, we often talk about this, Nana falls off the perch, you win a bit of cash on tats or the dogs or something. You can't just chuck it on your mortgage if you're in a fixed rate loan.
Well, it's exactly right. Good point. Now, look, most banks have a cap of an extra 10,000 per annum you can pay off. Yep. So you can't do that. And the other side of things, let's say you need to borrow, let's say you want to downsize your home or upgrade to a better home or sell your home. Well, you've got this potential exit penalty, which can be, they can be really, really heavy. These can be into the tens of thousands of dollars, these exit penalties. Right. So it's something you've got to be, really careful about. And, as I said before, you don't very rarely win with a fixed rate. Had you fixed it in maybe a year ago, I suppose you would have been, pretty happy with where the position is now. But as I said before, the horse is bolted. The rates have already risen too far. And as I discussed earlier, to do a 5-year rate, you're up between the 5.5%, 6% interest rates.
So that gap's even bigger, right?
It is enormous. So I'm telling my clients at the moment, stick with variable. Because look, with every interest rate rising cycle, which we're in now, it's followed by an interest rate reduction cycle. Absolutely. So that's coming. That's the good news. But when, I don't know, but that's the next part of the cycle.
Now, the other interesting, well, not other interesting part, but the other part about that is the federal treasurer, the new treasurer. I don't know if you heard yesterday, but is now also talking about a review into the RBA to potentially change monetary policy.
Oh, right. Okay. No, I didn't get a chance to pick it up.
So that can have some potential implications on this as well, because obviously the new government, they are concerned, as is most everybody, about the inflation rate at the moment.
Absolutely. Which we discussed that last week.
Absolutely. And, that's going to be a bit of watch this space. But again, this is a classic example again, as this is general advice. If you want specific advice, sit down with Steve or your mortgage specialist, because everybody's circumstance is different. So this is very pertinent.
Exactly. Now you are touching on something about the energy savings.
The energy rebate. There is no such thing as a free lunch. Well, there sort of is, because so this is for our Victorian-based clients, not our interstate clients. The state government of Victoria, if you want to jump on www.compare.energy.vic.gov.au, you need to have your power bill. It needs to be in your name. Go through, follow the steps, submit it, compare your electricity price, and the state government's going to kick you in 250 into your skyrocket.
Beautiful.
Now, you and I have discussed this as well.
Mm-hmm.
Your bill or update has come through that it's going to be more than that. Mine's going to be more than that as well, but at least it's taken some of the pain out of it.
Yep, I got my increased my warning that my rates are going up, and that'll be about a $318 increase over the years. So there went my energy supplement rebate. But anyway, it's better that it's a free kick, so why not take it?
Absolutely. Well, and it's interesting. I got one through from the baseball club again today, and it looks like we've got about 11% across the board as well. So depending on who you are, shop around, get your $250 out of the state government, and we look forward to catching up with everybody next week.
One last thing, if you're going to Bali, leave your shoes behind.
Yes, foot and mouth. Actually, let's put that down as a topic to discuss next week, because there's massive implications on that.
Absolutely. Go to Bali, don't bring your shoes home.
Absolutely right.
Get rid of them. All right.
See you, mate. Have a good one.
All right. Cheers.
Ciao, mate.